so.
All right, Mr. Raghu, appreciate you joining us, giving us your time on ET now to talk about the company as well as, of course, the all-important black money impact on Repco Home Finance. But moving on from one management to the other, we're now joined by Mr. Ashok Haldia. He's the MD and CEO of PTC India Financial Services, which has just delivered its Q2 numbers, and it's been a very strong set really coming in. Mr. Haldia, on the outset, congratulations on this good set of numbers. And firstly, you know, the NII growth has been over 50% this time around. So what have been the factors contributing to this NII growth?
There has been growth in the loan portfolio, and that growth has led to the increase in the interest income, and also there has been improvement in the yield, and the cost of borrowing has come down. So all that has led to the increase in interest income, and accordingly has also contributed to the higher profitability. The other factor was that there was an interest income which was related to the earlier quarter in respect of an substandard account that we did realize during the current quarter.
Okay, now your gross NPAs are down 23.6% QOQ. Give us the details of the account that was recovered from NPAs and what other recoveries can we expect from the current non-performing assets?
No, in the last quarter, as I had mentioned earlier, we had a loan account where we had recovered the overdue amount in the part, but then the recovery was affected after the end of the quarter, so we had to necessarily provide it for as a substandard. But during the quarter, we were able to recover the overdue amount, and that has led to that account, converting from substandard to the standard. And as I have been telling all through, that we have been constantly engaged with our substandard assets and also the stress assets. And we have been dealing, as a strategy, we are dealing with the individual assets and the individual promoter. And in fact, we were covered in the last quarter under the surface eye, and we have already initiated actions against the two of our substandard assets, and that action against those borrowers is well in advanced stages.
So, given all these actions you're taking and all the engagements with the substandard assets, do you think that we could probably see the NPA levels moderate even further from the current levels?
We are in the process of addressing all these NPAs and the stress assets. The amount of and the quantum of stress and the nature of stress assets is getting crystallized. And on the last occasion, I said that the total amount of all these stress assets should be around 800 to 1,000 crores. I will maintain that amount, and maybe as we move forward, the indications are on the positive direction, but it's very difficult to say as to what would be the level of recovery by the end of the year. But I would say that the efforts and the outcomes are in the positive direction, and we should see by the end of the year and the following quarter a significant change in the situation that we have today in terms of crystallization of the problem and also the resolution of the problem.
Okay, so let's talk about what really led to this kind of an improvement in your net interest margins at 6.15, and where do you see your margins ranging?
If we only take into account the interest income during the quarter, then our NIM would be around 5, and our spread would be around between 3.5 to 4. And this, as I said, the reason was the increase in the yield as well as the reduction in the cost of borrowing, because we did attempt to set in a newer innovative mode of financing our funding requirement. As we move forward, there is a pressure in the competitive pressure in the market in terms of the lenders vying for the good projects and the good promoters and offering the lower rates to those projects and the promoter. But since our cost of borrowing has come down, we are very well positioned in terms of that competitive scenario. And I would believe that we should be able to maintain our spreads around between 3.5 to 4 in the coming periods.
Okay, Mr. Haldia, thanks so much for joining us then. Thanks so much, Mr. Haldia, again for joining us. That's PTC India Financial Services, the management giving a positive outlook on the company. And of course, the company did deliver a very good set of Q2 numbers. But the markets at this point of time looking very healthy, really 1.8% of gains coming in. In fact, I think we're very close to really reversing all of the losses that we had in yesterday's session, where the Nifty got quite a hammering. 85.86 is where we are perched at, and the Sensex is clocking in 450 points of gains. There are just about 6 Nifty stocks that are really losing. Asian Paints, of course, once again extending the decline.